Let's talk about the Indian Rupee, which is now weakening against the US dollar. It has hit a new record low just today. This has happened after the rising demand for the US dollar by oil companies, like we told you on this very show yesterday. And at the same time, crude oil prices have logged gains on the back of supply concerns amidst the geopolitical tensions, the global macro growth, and the concerns around that as well. So how are these factors going to impact the Indian Rupee and the consumer in times to come? Let's discuss this. Kishore Narne is head of commodity and currency at Motilal Oswal. He joins us along with Vandana, who's the founder and CEO of Vanda Insights. Great to have you both. Vandana, to you first. What do you put down as the major reasons for this rise that we are seeing in crude oil prices, and where do you think prices are headed from this point?
Hi, good evening. I think there's considerable risk premium in crude right now. I would put it at easily anywhere between $12 to $15 a barrel. It's coming from two factors mainly. One is the Middle East. So the Gaza war has been festering for several months now. That has not actually restricted any supply, but there has been this constant fear of a ripple effect of that widening into the Middle East, and that fear was stoked again this week with the bombing of the Iranian consulate in Syria. So quite a bit of risk premium on that account. We know that Israel and the US are both on alert now because Iran has promised revenge for that incident. The other factor is, of course, Ukraine's spate of attacks on Russian refineries. We saw through the month of March an estimated 700,000 to 800,000 barrels per day. Nearly 14% of Russia's refining capacity has been forced to shut as a result of this. So these two factors, while again, actual supply has not been affected to the extent that prices are factoring in, I would call this quite a bit of speculative premium there as well. We know that hedge funds and other major speculators have jumped in a big way over the past 2 to 3 weeks. They've established long positions, especially in crude futures. So it's essentially it's a fear premium and a speculative premium at this point.
It certainly is. And meanwhile, we are seeing the pressure build up on the Indian Rupee as well. Kishore Narne, do weigh in on this. Do explain to us the context in which we are seeing the Indian Rupee take this fall against the US dollar, though, of course, year to date, we're seeing the Indian Rupee outshine its Asian peers. But what levels do you see it at in the near to medium term?
Good evening, Vikram. I think Rupee of late have been slightly weaker despite on the earlier rigidity in holding up its levels, despite dollar index moving significantly over the last 8 months or so. I think of late the markets have actually seen quite a bit of demand from dollar, especially on the crude front, especially when the oil importers have been buying dollars from the market. So I don't think we will see any significant depreciation beyond 83.80 or 83.85. But I think that could be possible. And that actually is significant because after 5 months, after September onwards, the levels which in the range which it was trading has been broken after almost like 4 to 5 months of trade. So that would actually take it to probably around 83.85. That should be the worst level for the next quarter or so.
But of course, one of the primary reasons is the movement in crude oil prices. But Vandana, Dr. Feridun Fesharaki, we were speaking to him in an exclusive conversation with us. He says he believes that these high crude oil prices should not be a problem for India and that we can easily afford $80 per barrel rate. Do you agree with him?
Vikram, I have the utmost respect for Mr. Fesharaki. I wouldn't want to get into he said, but I disagree. But look, we are all independent analysts in our own right. And while, okay, arguably India can pay $80, and throughout last year we saw the prices were much higher through 2023, and yet Indian economy did very well. India managed, the inflation was much higher as well, and India still managed. And not only that, Indian oil consumption continued to grow in 2023. However, I wouldn't necessarily use that as a yardstick going forward. because 23 to a large extent, India still had the momentum of recovering from COVID. So, for brief periods, yes. And of course, not to forget that throughout last year, the government did not allow any movements in the pump prices. So that also shielded the consumer to a large extent from what was going on in the international markets in terms of high prices. I would say that perhaps around 70, 75, that kind of a range, or for a longer term, is more comfortable for India than 80 or higher than 80 prices.
But yes, you've cited the historical context, which is appreciated. But when you look at what could happen with crude oil prices in the future, how do you think that's going to impact? Already we're talking about a falling rupee, but look at the larger picture of the Indian economy, how inflation is moving and how this could hit consumption at a time that rural consumption is trying to pick up. How do you think the economy, if these crude oil prices remain at elevated levels, how would they play out on the Indian economy?
Yeah, so just to touch upon your earlier, you were discussing the rupee's depreciation as well. I think that is a double whammy for the country because crude prices are high and now refiners are going to have to fork out much more in rupee terms to buy the same barrel of oil. That's not good. Longer term, especially if these twin pressures remain currently present, the rupee continues to be weak and oil prices continue at current levels or God forbid to go even higher, it will definitely have a dampening effect on the Indian economy. That said, the economy is just as I mentioned earlier, it's got a really good, strong momentum going. So I don't think it will be a big hit, but this is certainly something India does not want at this stage, the double whammy of a weak rupee and high oil prices.
Yeah, definitely doesn't want it. Narne, tomorrow the MPC is going to put out their decision on interest rates. How much of this current scenario, the rising crude oil prices and the pressure on the Indian rupee, how much are they going to factor into their decision where the larger consensus is suggesting they will stay put for the 7th time in a row?
Yeah, I think we also are anticipating that no rate change at this point of time. Again, see, the crude oil prices have been under pressure for some time, and especially last 3 months, we've seen the strength resume in crude, and probably we might see the upside to continue. But it is too early to factor in, and most of the other macro indicators, especially in US, are also showing that some kind of a slowdown should take place in second half of 24, calendar year 24. So rather than a rate cut at this point of time, probably what we think is post June onwards, June or August is something where it's typically time for rate cuts across.
Watching the moving pieces, crude oil prices is always a difficult one. We're already seeing gold touch these highs, and that's a big import. When you look at gold and oil, and the current account deficit is something that has remained elevated for some time now. All of these factors are going to be at play. The inflation story, what the RBI does with those interest rates, and we'll have to keep checking in with experts like you, Vandana and Kishore. Many thanks for joining us with your perspective on this edition of India Tonight. Let's tell you what happened in the markets today. A good day, really. The Nifty has breached the 20,600 mark, and we've achieved a new feat for the Nifty. The gains today led by HDFC Bank and Tech Mahindra. These two stocks were leading from the front. And the up move we saw today continued in the broader markets as well, which have been rising. The mid-cap stocks, they have been going up. And sectorally also, we've seen IT turn out to be the top gainer. This has happened for 2 days in a row now. Banking stocks were participating in the upward momentum. Auto stocks as well. And PSU banks, that was the other part of the story. The top sectoral loser today, a clear reversal from what we saw in trade yesterday.